The integration of European financial markets is as important as further integration of service market. In today's podcast, Vittorio Grilli from JP Morgan highlights the importance for Europe to develop its service market to ensure competitiveness. He also tells us about the opportunities and risks of FinTech, RegTech, and in general technologies for banking business models. And he explains how the EU is now better equipped for managing a crisis, observing already a healthier and safer banking sector. This podcast was recorded during the executive seminar of the Florence School of Banking and Finance, which focused on the new world of financial stability. Vittorio Grilli, we were very pleased to have you opening the executive seminar held at the Florence School of Banking and Finance today. Could you give to our listeners an overview of your intervention in relation to the new world of financial stability?
Yes, thank you. Great to be here. What I spoke about is the importance for Europe to develop is financial market services, but more in general, the service market. What I see as an important challenge of the European financial industry, but not only, toward being competitive with the rest of the world, is the ability of scaling up its own businesses in order to be competitive. And compared to a larger area of the world like the United States or China, Europe has potential very large, wealthy market of over 400 million customer for all kinds of services. But Europe is still segmented as far as financials and service market in general. And this puts Europe still at a competitive disadvantage. So what I try to highlight is the importance that now with the new commission, there is going to be a renewed effort in trying to integrate service market and of course financial services as well. A lot of good things have been done, but I think that still Europe is not being able to come up to the challenge in this sector. It's done a lot of work in integrating the good commodity markets in the past and has been very competitive there. But now a lot of the world economy is driven by large service sector like tech giants, social media, in which Europe is lagging behind.
There are important developments in technologies and business models which also impact banking and finance, for instance FinTech, RegTech, for which innovation is a time ahead. JP Morgan has been a leader in this field too. In your view, how can banks take advantage of the opportunities of these evolutions and better tackle some risks and challenges they face?
FinTech and technology, as I was saying before, is now a driving part of a lot of businesses, including financial services and banking. Of course, it's expensive. So, just going back for a minute, what I was saying before, is very important for companies to be able to be competitive, to scale up their businesses in order to be able to afford this kind of investment in technology. Now, I think that there are several areas where FinTech or technology has changed and has been changing the banking business or financial sector in general. Of course, I think I would point it to two. One is the way in which both linked data are processed, a huge amount of data, and the ability to extract important information, and that goes toward a better risk management of the bank. You can have in real time such a accurate extraction of information that you can reallocate your portfolio and might minimize the risk in a much better way than you were doing before. Much better information flow to your client and much better cost efficiency. And here clearly there are even newer development, all the algo trading, which are not done by human any longer, but by artificial intelligence is a new thing. So, of course, you have to monitor, and I think the authority look into it. And, of course, new challenges, which are very useful to the industry, but pose potentially new problems. And so you have to be clearly ready to first understand and then monitor the market.
During your tenure as the Vice President and President of the Economic and Financial Committee, you have been designing the new crisis management architecture of the European Economic and Monetary Union. 10 years after, would you say that the EU is better equipped in the event of a future crisis?
Yeah, absolutely. I think that in these 10 years, a lot of very, very important things have been introduced at the European level and a single country level. The direction of travel has been absolutely right. Now our banking system is much more resilient in general. Our banks are much better capitalized, and clearly they will be able to withstand in a much better way future problems. Which, however, will not occur. And in general, also, the market is much better regulated, so that also will decrease the event of future crises. Now, I think that this has been an incredibly good achievement for Europe, but I think that the world market in general has been also doing the same thing. Where probably our speed of travel has not been as I would have wished is in making not only healthier and safer, but also more competitive. And we are going to point one. I think that our banking sector is still not as efficient, and you can see it as competitive as other sector in the world. And also, beside our banking sector, we clearly need to broaden and deepen our capital markets, which are needed to support the economy and not just leave all the job to the banks. And so I think that there as well, progress has been made, but I think probably some acceleration would be welcome.
Thank you very much for your time and your answers.
Okay, thank you.
Thank you for having listened to this podcast by the Florence School of Banking and Finance. For more information and to listen to all our podcasts, visit the webpage fbf.ui.eu/podcasts.